First of all, will we revalue it to $10,000? Will we revalue it significantly higher? I think so. I don't know how much higher, but I think higher. The real reason what I'm describing will have to happen, whether it's Stephen's way, whether it's my way, whether it's Grant's way, or whether it's anyone else's way, is as government, now we got to go out to the fiscal problem. I have strong opinions on it, and before giving an opinion, I think it would be helpful to set everyone right on this, at least from my point of view. Revaluing gold is very realistic. If things do not turn around soon for the debt situation, it might become a necessity. Now, I want to spend time on that, but I want to address the things that you said first. First of all, will we revalue it to $10,000? No, that's idiotic. We wouldn't do that, right? Number one. Just to go down the list, right? Will we revalue it to its current price? Possible. I don't think likely. Will we revalue it significantly higher? I think so. I don't know how much higher, but I think higher. Look, historically, and we did it in 71 and 73, gold being revalued is a one-off, right? I mean, they raised the price, just the mechanics of it. They raise the price on the books that we carry it, and then the government borrows that much less, or they spend that much more. Essentially, you're tapping a piggy bank. It does not serve us well on its own. It's like, giving an irresponsible child more money without telling them to stop spending money on video games or something like that. So as a one-off, it's irresponsible. We irresponsibly did it before. When we took it from like 35 to 42.20, we spent the money, and it happened right before the oil embargo. So it just was a disaster, and it was used irresponsibly. Now, there's some important details of this, and there's some important other things floating around that hopefully I'll be able to tie together. But
says something big could be coming for gold, and it might happen sooner than you think. If the debt crisis doesn't get better, revaluing gold could become a must. But here's the thing. Forget the wild $10,000 prediction. Vince calls that nonsense. He believes gold will be revalued, and history proves it's been done before. But every time it happened, the money was spent recklessly, and the results were a disaster. So what happens if they do it again? That's what Vince is about to explain, and it's something you need to hear. So don't skip, and let's enjoy the video now.
I want to start by looking at the debt situation with regards directly to gold. All right. The way it could materially help the U.S. Now, I'm echoing something that's already out there, the Mar-a-Lago Accord, whatever, Stephen Moran talked about it, but I want to try and set it straight for people. The way it can materially help us, and do so without being irresponsible, would be to revalue it and, pursuant to the Constitution, use the proceeds to literally retire the debt. Now, I'm not the first person to say this. Grant's Interest Rate Observer had a nice article on it. A couple other professors talked about it. The Constitution has an amendment, and the amendment is that you can't sell gold. Our gold cannot be sold unless it's directly used to retire the debt. So it's a way to tie it to the deficit, and it's actually pretty wise. But there are several ways to do what I just described. But what I described is to retire the debt, or to lessen our debt, to use the price of gold to lessen our debt. So the first one would be, we raise the price of gold. Let's just say we raise it to 3,300, right? I don't think we will, but let's say we do 3,300. And then we can just basically change the accounting ledger to have more money, and take that money and do what with it? Well, if you were to go out and buy the debt tomorrow, bonds would explode and we'd be paying a high price for them. It would be bad. You can take that. So that would be stupid tactically, right? But it would be the right idea, right? A smarter idea would be, and other people have talked about this, would be setting up, was it Andrew Jackson, a postal fund, or was it Hamilton? I forget who it was. Set up a postal fund, the guy with the tall hair. And that postal fund would be, you put the money in the fund, and then you trickle it out buying treasuries from time to time. So those two examples, the aggressive one and the patient one, those amount to a QE. It's a gold quantitative easing. You're going to put money into the market by retiring our debt. It's fabulous. Now, it's It's not easy to do. And here's why. It's not popular. Okay? And in order to spend the money on a full revaluation, assuming that we had a full revaluation, you would need to sell or hedge the gold. Now, I'm echoing what Stephen Moran said and a little bit of a loophole that he's working with here. So here we go. Here's what I would prefer, which I think is actually doable. We revalue the gold, 3,300. We take the proceeds with or without selling the gold. It's political suicide to sell the gold. However, we can do other things like hedge it, like lock in price without selling it. Now, this is going to get a little bit wonky, but this is one of the things they can do. All right. We literally buy bonds of other countries whose currencies we wish to strengthen versus the US dollar. Now, you're going to have to just assume that you're going to have to take this as an assumption that's true. If you take dollars and you buy other currencies or other countries' bonds, you are retiring US debt. Of course, you're buying someone else's debt, but you're retiring US debt. Okay? So that is a way to not necessarily honor the letter of the law, meaning we have to retire debt with it, but honor the spirit of the law, because it's just a fact. If you take US dollars and you buy someone else's bonds with it, you're retiring US debt. Yes, you're swapping US debt for some other country's debt, but you're doing it with a trade partner who is going to be buying your stuff. So there's a loop. You're creating a loop there, and that's my in my naive way, that's my preferred way of doing it. Now, there's precedent for this. We have something in the United States called the Exchange Stabilization Fund, affectionately known as the Plunge Protection Team. Now, what the Plunge Protection Team does is, using various financial means, they will stabilize markets when they need to. And one of the ways you can stabilize a market is, the gold price is too high, then we're going to sell it, or we're going to hedge it, and we're going to take the dollars. It basically comes down to the dollar. If the dollar's too strong, we get dollars and we buy someone else's currency. Kind of like when there's a crisis in Europe and they need dollars, we will swap dollars for their currency. And where do you get the dollars? Well, you get the dollars in the Exchange Stabilization Fund from their fund. And it's not a lot. It's only tactical, and it can only be done for short periods of time to avert a crisis. This, what I just suggested, which is a variation of Stephen Moran's version, is a full-blown implementation of this tactic into a full-blown strategy. All right, so we've got tons and tons and tons of gold, allegedly, right? We hedge it by selling it forward. We don't sell it, but we hedge it, and then we take the funds and we go out and we buy. Who are we negotiating with? Who do we want to buy our goods? Japan. We want Japan to buy our cars? Well, we need to make the dollar weaker, right? So we will then take our dollars and buy yen with it. It makes the dollar weaker versus the yen. It makes them more likely to sell us to sell more cars to them because our dollar is cheaper. And it closes it's kind of like a Plaza 2 Accord, one deal it's a one bilateral deal at a time. And I think this is something. So that's the whole mechanism of it. I mean, I didn't want to go down a rabbit hole too much, but I think there's a lot of misinformation. Is such a common word, such a nonsense word, but there's a lot of error out there in understanding this. Everyone's in love with Stephen Moran with his Mar-a-Lago Accord, right? That's what they were talking about a couple months ago. And although it was officially put on the side, he actually said this in a public statement. They're starting to do it. They're starting to do things in it. And I'm seeing that. And the bilateral deals that he's negotiating. Now, what the Moran idea is, what I said, only literally selling the gold. And he even says it's politically unexpedient. It's politically a third rail, something like that, he says. And so he wants to take the gold and sell it and take the proceeds and buy other people's currency. Retiring our debt in doing that. We're buying someone else's debt. I don't think that'll happen, but I do think down the road you're going to start seeing us start to hedge our debt. But in doing all this, we lower the debt, we weaken the dollar for trade, and would be supportive of allies who want their currency stronger to begin with. Just zooming all the way out to the political environment, we need to monetize our assets. If you own land, you need to sell it. If you own gold, you need to get money for it. You need to monetize our assets. And there's a lot of assets we can monetize. Freddie Mac's going to go public again. Fannie Mae's going to go public again. These are assets being monetized, right? One way or another. We're either going to sell it, loan it, or go public with it, something like that. So that's the first thing. And the culture, and Scott Bessent had said that. He said, we're going to monetize assets. And then that's when everyone started saying, oh, they're going to revalue gold, right? And then the Bitcoin people were saying, revalue gold, take the proceeds and buy Bitcoin. No. Revalue gold, take the proceeds and buy debt, retired debt. You can buy Bitcoin too if you want. But anyway, you could see how once you start fighting over what we buy, it becomes a disaster and it becomes a partisan problem. All right, so that's the first level, right? That we're going to monetize assets. And gold is one of the most obvious assets. Now, Tom Luongo, who, we're friends and we're mutuals, he had focused on the housing, Freddie Mac, Fannie Mae, and he's correct about that. There's other things that we could do too. You could offer people home equity loans, HELOCs, right, tied to treasuries. And in doing that, you tell them, we'll give you a loan against your treasury, against your home equity if you put it in stock. So we're just kind of extending and pretending a Ponzi, but those are things we could do. But I'm sorry, I digress.
So here's the takeaway. If the debt crisis keeps getting worse, revaluing gold isn't just possible. It might be the only option. But as Vince said, history shows it's not always a good thing. If you found this eye-opening, hit that like button, subscribe, and press the bell so you don't miss what's coming next. And right here on your screen, click the next video. It's going to show you exactly what could happen to gold and silver next. I'll see you there.